Good evening, everyone. Welcome for today's session on quant Business Cycle Fund NFO. Today, our guest speaker is Mr. Sandeep Tandon from Quant Mutual Fund. A brief introduction about Sandeep Tandon. He is a founder, CEO, and CIO of Quant Group, and he has a vast experience of over 27 years in capital markets. His journey in the money market business started in 1992-93 with GIC Mutual Fund, where he was a trainee. He later joined IDBI Asset Management, where he was a founding member and was a part of the core team that initializes the asset management business. Sandeep worked in a pivotal position at several reputed financial services firms like ICICI Securities, Kotak Securities, then Global Derivatives firm. He has also worked in Economic Times Research Bureau. Good evening, Sandeep, and warm welcome for today's session.
Hi. So can I start now?
Sure, sir.
Okay, perfect. So very good evening, everybody. Let me just put my presentation, then we can talk. Just give me a second. Is presentation is visible, correct?
Yes.
Okay, perfect. Our slides are also moving?
Yes, sir.
Perfect. Let me come to the straight away to the presentation. Okay. So I think everybody understands the importance of cycles. Okay. At Quant particularly, we specialize in cycle analytics as a thesis. Okay. We have all grown with various like how civilization came, civilization cycle, weather cycles. We talk about business cycle. People talk about economic cycles. Okay, and in India, so it's very famous. People look at our old Kudli analysis. People understand it, what type of cycle, good, bad. Rahu cycle or Shani cycle, all are familiar, and these are all on lighter notes. I'm sharing that. So the importance of cycles are well known. Okay. Now we find it very extremely interesting what we call it mathematics of cycles. When I say use the word mathematics of cycle, what I mean by that. When we try to analyze 100 years of data, thousands years of data, let's take example agriculture. We have thousands years of cycles. Okay, thousands years of data, we can talk about and connect the dots of agri commodities, price movement versus what type of environment, what type of weather condition, what type of earth analytics, what type of magnetic fields. I'm just giving you ability to connect is very important. And in the market also, sometimes people talk about 8-year cycle. Some chartists will talk about 10-year cycles. Okay. Now the problem with industry is that people say sometimes these cycles work, sometimes they don't work. Okay. And and then they get frustrated saying that they don't work properly. Yeah, it is cycle. Sometimes it works, sometimes it doesn't work. The beauty of these cycles analytics, what we have built at Quant, is all about understanding the lead and lag effect. Okay. Sometimes the circumstances or some of the data points which you look at, you might find it very difficult, very easy to say that something similar characteristic. But the reaction this time is very different. Okay. Very common problem in the industry which we faces. Now let's understand. So this is where our strength comes into picture, where we talk about that how well we can connect the dots and try to identify the lead and lag effect. Which cycle is leading or which cycle has a lag effect. Okay. So those are the data points which we can talk about. And it's a very interesting phenomenon. That's why I use the word mathematics of cycles. Okay. Now, coming back, so this is the background how well we are trying to. I'll give you some more real life example and showcase some of the larger perspective data which we are talking about. Let's talk about our data from a business cycle perspective. Since it's a thematic fund, obviously thematic fund perceives more risk, and it is correct also. Any thematic fund is a concentrated portfolio which naturally will be more risky. Now, what is the edge we bring to the industry? If we are able to identify extreme inflection points on these various sectors, then you can dilute the risk of a thematic fund. And that is the very important concept from our perspective when you talk about is that you can dilute the risk associated with thematic fund, because if you were able to identify some of the inflection points of these sectors and you are early in taking these calls, then the perspective changes completely. So this is exactly what we are trying to showcase to you. And that's the reason we're talking about when we talk about business cycle fund. Yes, it will take concentrated bets. Why the concentration bets? Because concentration bets will come from a background of conviction, and conviction comes from data. So when multiple data points or data science is endorsing some radical things or some changes coming, we can appropriate take steps or either exit from some of the sectors or take a very sizable bet, and then you can conquer or you can take advantage of the situation. So that's a small background. Very simple thing when we talk about mathematics of cycles is all about how
So
from a
sorry
very
to interrupt. Sir,
yeah
sorry to interrupt. Your camera has to be adjusted.
is okay. 1 minute is gone. Okay,
Yes.
okay, hold on. Okay, let me see.
Obviously, we may off the camera during the presentation, and at the end, you may on it while question answer.
No, just hold on. No, it's not coming.
It's fine now.
Okay, let me restart the presentation again because presentation has gone.
We can see the presentation.
Okay, okay, you can see. Okay.
Yes.
You can just make it full screen.
Make it full screen.
Yeah, just hold on. I can't see my own presentation. Just hold on. Okay. Perfect. You can see now, na? Okay. So this is what we talked about. Okay, I was in the previous slide. So when we're talking about from macroeconomic cycles or when we talk about macro data, global data, and if we can combine with the, let's say, policies decision or event which plays out, how from a much larger perspective, macro events can lead to a sector rotation thesis or the benefits can come in favor or against particular sector. That's what we are trying to showcase out here. And this is all about human action is governed by cyclical phenomena or cyclical phenomena. This is what we was trying to explain you. I'm not getting into very specific presentation, but this is what the thesis of business cycle quant. Okay, that our ability, how well we can optimize these cycles together. That is something unique about it. So we talk about how the art and science of the cycle analytics, but how deep rooted it is in terms of if you start understand the long-term cyclical dynamics, how well you can actually foresee. So I'll give you a small example. You are familiar that we in 2012 we talked about how 2020 till 2030 will be most challenging phase. So we talked about in 2012 I have written how the 2020 the bubble will burst, inflation will start going to the roof. And we talked about cyber war, biological war. We talked about deteriorating weather condition or agri prices going to the roof. We all saw that trailer few months back. Now, something will wonder, in 2012, we have written about these things. Year-wise year, it played out well. How can it possible? Yes, the answer is very simple. When multiple cycle was coinciding in 2020, that's the reason we talked about something is changing in 2020. And when we start linking with other data points of the macroeconomic cycles and other data thing, we realize that what is coming. Now, ability to connect the dot and see what is coming, obviously, that's the strength of predictive analytics model we have built. But cycles analytics plays a very important role. One of the reasons why we launched this fund. So let me explain you in a very simple terms how we identify whether this particular sector or this particular stocks needs to be bought in our portfolio from a understanding point of view. So we built something called a money flow analysis. Like we talk about like in the current universe is all about energy, and we all know energy never dies. It only changes its forms from hydro to mechanical to electrical or maybe from kinetic to potential and so on. Okay, similarly, when we talk about in the market, we say this much market cap got eroded or this much market cap got created. That is also a myth and not the correct way of looking at, because you have lost, I have gained, I have lost, somebody else. When you look at world as a one market, asset classes, money shift from one asset class to other, how money water flows from mountain to valley, something similar happens on the when it comes to the markets. With the help of money flow analytics, what we have built, we identify the inflection points in the market. Basically, we are trying to say the money flow analysis is a function of risk appetite, liquidity, and the fluidity of the stock or asset classes. So let me, without getting into more complex mathematical terms, let me explain in very simple terms. So let's go to the next slide. This slide is visible to you. This is the most important one for you. How money flow works in real life. This is something which we have practiced in real life. If you all recollected September 2021 and various forums, we said that there was a euphoria in global equities, euphoria in new age companies, technology company. We were the only mutual fund or the money manager in the industry who sold 100% of their portfolio on the technology side in September, October. November portfolio check, we don't find any of the technology names. Why we sold off? Because we spotted that risk appetite and liquidity was the highest for the synthetic IT index which we created. So this was long-term valuation top. Not only India, it was actually valid for global market also. It was valid for NASDAQ also, and so is the case with MSCI Technology Index Global. Let's look at banking. Okay, when I said in the beginning of 2020, we were worried. So first quarter of 2020, we spotted the risk appetite liquidity again highest, a long-term valuation top. But Fortunately, in same year by September 2020, it reversed the situation, risk appetite collapsed and equity started inching up with a medium-term valuation. And something similar happened in September 2021 also, where banking started rallying, something similar characteristic. Now let's look at pharma. Why I have chosen pharma? Because you have seen in last 2 months, our exposure in pharma sector has increased considerably from zero. So we are hardly any exposure except small cap. Let's look at fourth quarter of 2015 we are talking about. And if you go back and check between March to September 2015, most of the pharma names made their lifetime high. And some of the prices we have not seen even till date. And what was the behavior characteristic? Risk appetite highest, equity highest, a long-term valuation top. In fourth quarter, by fourth quarter of 2015, this was, to be precise, September 2015, we have spotted this. Come September 2019, October 2019, okay, risk appetite, classic lowest, liquidity, one of the early stages inching up, a long-term valuation bottom, 4 years later. This is the time we actually loaded chemicals, specialty chemicals, pharma, healthcare in our portfolio. And one of the reason in 2020 we got the massive outperformance was this post-COVID. Our portfolio just rallied significantly because this call which we spotted worked very well for us. Now comes September 2020, we sold all the pharma names in our portfolio except small cap. All other places we largely exited. One of the reason why.
Sorry to interrupt.
Yeah.
Your slide is not moving. Are you on the same slide?
Which slide is you can see?
Slide number 6.
Okay. Okay. No, we have. Okay. Hold on. I'm on slide number 9. Actually, this is 9. Is that visible?
Now you slide number 9, and your slide is not full screen. So we can see slides on the side also.
Okay, it's better now? No.
No, it's the same.
Okay, hold on. This is the problem actually last time also we faced. Just hold on. So generally we don't like, that's why I prefer Zoom Meet because this is something which creates problem most of the places actually. Is full screen now?
No, sir.
Okay. I don't know how to do it because for me it's a full screen. Okay. Anyway, let's continue because the next time you do a call, we will like to send a Zoom invite because this becomes a problem otherwise, you know.
No worries, sir. We will continue.
Yeah. So this is a slide you can see. I was trying to give you some explanation on the rotation, how. So comes September 2020, we exited pharma. Why? The reasons are showcased here. Now comes first quarter of 2023. We bought pharma name in our portfolio. Why? This is the reason how the behavior data points are in favor. And that's the reason you saw exposure in pharma is around 5-6% of our portfolio. Something similar in ITC in 2021, September 2021, October 2021. Risk appetite liquidity was data point which was conducive as a long-term valuation. Rest is history. You've seen for 204, 208, we went up to 435 very recently. Okay. So one of the very big money we made when it was 9% of the portfolio. ICICI Bank, very interesting example. Whole world love ICICI Bank. We also like it. But in September 2022, we sold ICICI Bank. Why we sold it? Because our risk appetite liquidity was lifetime high. It's a long-term valuation top. We are not saying price top. We are not saying earning top. In fact, last quarter also the recent number was phenomenal, but ICICI Bank didn't perform. We shifted from ICICI to HDFC Bank and we made good amount of outperformance. This is exactly how we place. So you'll get a sense in terms of our approach. Now I'll come back to the another slide. Can you see slide number 10 now?
Yes.
Okay, so this is the cycles fund positioning. Obviously, very clearly saying that this product is confined for a long-term investor. Because the ideal opportunity to capture long-term trend when you buy a sector at the exactly at the bottom of the cycle and try to sell at the peak of the cycle, sometimes cycle can complete it in 1 year's time if you are lucky, but otherwise it's typically 3 to 5 year phenomena. And that's the reason we are saying 5 years, because absurd money can be made if you are able to identify these inflection points and are willing to take a sizable bets on those things. And this is something that's the reason we are saying this product will act like a flexi fund, but a concentrated flexi fund. So we'll talk about only 6-8 sector, and we would like to take a very concentrated exposure to 3 to 4 sector. And that's the reason perceived risk remains high. But if we can play through this thesis, which I have tried to explain, we can generate actually a good alpha. From a risk perspective, we will like to say that only 33% exposure will be capped for any sector. But in real life, it will never go between 20 to 23% also, unless something similar like how I explained you, Pharma 2019 was a very classic bottom from a longer term perspective. Something like that comes in any sector, we will be all out and say build 33% exposure in that sector. And that can be very massive. When that opportunity comes, the most important aspect is that your downside get protected and your upside is open. So that's the way concentration thesis can give you extraordinary returns. So this is what we are trying to showcase at Quant in terms of our cycles fund. Apart from economic cycles and other things, look what even nowadays we talked about. Yeah.
Stop screen sharing and do it again because we could not see the complete PPT.
Which slide you want to see again?
The same. You are on a correct slide, just that the entire slide is not properly visible. So stop screen sharing and do it again.
Okay. Anyway, I'm on the last slide, then I will open up for question answers,
Okay.
Okay, so this is more on the disruption slide. How disruption, or I call it innovation or disruptors, people talk about. Disruptor or innovation can lead to a multiple expansion. It can lead to a earning expansion. So it is beyond economic cycle. Sometimes these phenomena also leads to opportunity for sector rotation, both in terms of entry or exit. I will stop the presentation here, and now I'll open the session for question answers. Okay, let me just do that. Okay. I'm not visible, correct?
Yes, you're not visible.
I'm just trying. My camera is obviously not is on, but is not getting.
Is proper.
No, I'm not able to connect. I don't know why. It's because you can't see
now,
me. But
now I can see you. Now it is proper.
Okay, perfect. Chalo, good.
So I take the question now.
Yeah, please.
So the first question is from investment point. Is this business cycle fund is an all season fund?
Answer is big yes. Okay, but it is not. It can be called all season fund, but it can't be called all month and all week and all days fund. Okay, why? Because that's the reason I explained. In a sectoral thesis, cycles are longer. It typically 1 year to 5 year phenomena, typically average 3-year cycles. So it is a longer duration product. One should be very clear. Don't come for 6 months, 12 months and 15 months in this product. Okay, that's clear. Like flexi cap, you can come for 6 months and 12 months also. But this is a concentrated flexi cap where you should have a longer term horizon if you want to really optimize it, if you really optimize and the way economy is growing, we can call it all season fund because some opportunity, other opportunity is visible. Okay, so we are very confident that could be a great product for from a somebody who likes to take concentrated, like lot many PMS customer, lot many AI type customer. There are a lot of HNIs who says I want a high conviction calls ideas. I have a patience for longer term perspective. This product is meant for them because they understand the perceived risk. They have that focus from longer term perspective, and they are patient to look for a very meaningful alpha. Because I have seen if you cycle is in your favor, and if you able to take a sizable bet at right time, you actually generate absurd returns.
Next question. So next question is, how will the hedging be done in this fund?
So hedging is like normal hedging, the way you do for any other fund. Similar hedging is rules are applicable for here also. But uh, the way I will say, since we run our overall portfolio management very dynamically, uh, it is not necessary that this product should be considered a very aggressive view from a hedging perspective. That's the reason saying that thematic, we will be taking a concentrated bets on the sectors which we like, and diversification comes through stocks. Basically, let's say pharma, we like it. And so we can say maybe instead of taking concentrated bet only 3 names, I will take 10 stocks portfolio, but concentrated bet for the sector. So hedging normal circumstances, the ideal situation would be in this thing, instead of hedging, we will be looking sometime on the call writing options in a big way in this product, provided we get liquidity in these names. Okay. And if all the stocks which we have as part of Fendo, because sometimes if we have bought some of these stocks from a longer term horizon in our portfolios, I say we will be buying early and virtually trying to see if we can sell at the peak of the cycle. Then hedging does not make sense because a concentrated bet, but writing out of money calls option make a lot of logical sense, that I want to have a large holding also, but I am also reducing my holding cost by writing the call options.
Next question is your view on IT, pharma sector and infra sector.
See, I tell you, this becomes a very theoretical question. I have said that in every call, we like manufacturing and infra as a thesis from long term. Pharma, I just explained you what is my current view. IT, we still don't like it because data points have not changed to say that they have reached most neglected phase. But yes, from a trading perspective or tactical position, we a number of times in last 2-3 months we have participated in IT. But if you ask me whether I'm going to buy IT as a sector on today's basis, on today's data in our business cycle fund, answer is big no. As of now, they have not reached that neglected phase, which I look at. But as you know, we manage dynamically. When data points comes, we are happy to do that. So it becomes a very theoretical exercise by telling you what is my view right now. It can change after 15 days, 1 month, 2 months, depending on the environment and the data.
Allocation will be there in the foreign stocks.
So on paper, answer is yes, we take approval, but you know, there is no limits available for anybody to participate. So it's again a theoretical exercise right now. Flexibility of approval is there. And as and when it happens, we are open for it. But from a this decade perspective, we are very optimistic more about India than any other country. So risk profiling is more suitable for India. So I'm not actually, even I get option, I'll prefer to buy Indian stock because my risk adjusted returns potential is far superior in India because we are more worried about global risk. Okay. And you have seen the India outperformance in last 1.5 years. So you'll get a perspective. So it does not make sense. Yes, it gives you flexibility. We have taken as when it happens, we will be very open to invest, but as of now, that option is not there. You are not audible, huh?
Next question is, what is your view on metal and BFSI segment?
So metal is a pretty mixed view right now. There is no decisive data point to say whether we are very aggressive or we are too negative. Nothing major as such. BFSI, we have been constructive for a while. We still remain constructive for this space. But again, this question will also become a theoretical for us because you know it. If data change, we will change and rebalance our portfolio. So we have no love and affection. Okay, this is my 5-year thesis. This is my 3-year thesis. This is my 10-year thesis. We don't operate that way. Okay, as I said, we bought pharma in September 2019, and by September 2020, we got good money and we saw euphoria. We exited. Okay, so but as of now, metals is neither in the hated zone nor in the admired territory. So it's somewhere lackluster. Nothing much can be said and read about it. BFSI, we are anyway, I've said on multiple channels, we are constructive,
Next is your investment in Adani Group will not cause any problem in the future.
So this is again that's not the way we look at. I'll give you a very classic example. We are data-driven house. We don't work on any narrative or any thesis which market plays. Till 2019, Reliance Group was also the same narrative. I don't want to buy Reliance. We don't trust Reliance. Okay. And 2019 onwards, everybody started treating Reliance as a godfather and they are the visionary people. They created so much. So I'm not in that camp of love or hate any relationship, any group. We made good money in Adani. When event risk played out, we pruned down Ambuja and or sold off whichever port was there with us. Neither port was expensive when we had in our portfolio, and Ambuja was anyway we were pruning down. It was the debt-free company. So event plays out, we will take appropriate steps to rebalance our portfolio. As of now, we don't have any Adani Group in our portfolio, but we don't give any commitment to anybody what I will buy, what I will not buy. Okay, so it's a data-driven approach. As of now, the risk appetite for group has changed significantly, and on the reason we are not participating, and I don't think it's going to change on an immediate basis. Maybe for next many quarters, I don't think we'll be participating. That's the way data is showcasing. But as I said, we are not associated or affiliated in any stock or any sector or any group in any other manner. If data change, we actually made good money in Adani Group, despite whatever event played out. It was stupidity on that management. They didn't manage or reacted very well. Okay, irrespective of that, we are data-driven house, so we'll just stop on that. If data showcase, we will exit. Data showcase, we will look into it.
That was the last question.
So I will answer one more thing, which a lot of people have to understand. I want to spend a minute on explaining you this data, and a lot of people don't understand the difference between that. Market is driven by narratives. Okay, narratives are sold in this market for various reasons. Investment banking houses sells narrative. Research houses sells narrative, media sells narrative, people who own large holding, they sell narrative, companies management sell narrative, okay, on various calls, okay, and I'm using a very harsh word, they sell narrative, okay, narrative बिकता है, okay, और narrative लोग खरीदते हैं. In very blunt manner, I'm telling you, our ability is that how well you can differentiate between narrative and data. So we are data-driven guys. We don't get into narrative aspect. And yes, making statement is equally easy. Practicing these things very difficult. But whatever capability we have built something called perception analytics, which capture many things. And hence, since people talk about Adani, let me give you some perspective. I tracked this company from 1995, that group, when Adani came out on an IPO at 95, maybe 62 crore rupees market cap company from the coal importer exporter or coal importer company in this country. I have seen the growth. I've seen the 99, 2000, the port we used to own. And I can tell you the port which they have built or the leadership which they have, next 50 years in this country nobody will do repeat it. Okay. So the narrative is very different. The reality is a hard assets. Okay. Today we have also exited. That's a different issue. But lot of people say वो अदानी है, वो नहीं खरीदते हैं. Okay, because somebody has taught us वो नहीं खरीदते हैं. It doesn't matter. Okay, when Data changes. Same thing was there with Reliance for long period of time. Okay. Lot many money manager on media has said we can live without Reliance. Okay. But they couldn't live without Reliance in 2019. So it's all about, that's the reason I say was PSUs. A lot of people say I don't touch it. Look at the move in some of the PSUs and PSC banks has given. Okay. The PSE index is lifetime high, capital good lifetime high, FMCG lifetime high. This is an area a lot of people who are not comfortable. IT not perform, pharma didn't perform. Okay, the most admired territory, BFSI didn't perform. Okay, DMart didn't perform, Bajaj Finance didn't perform. I'm talking about Asian Paint didn't perform. All admired category stocks which was there. So that's the reason I'm not making comment on individual stocks or sector. I'm just trying to give you or any group. I'm trying to understand you. Please come out of this myth. Narrative बिकता है, please don't buy narrative. Use your brain and see the difference what you have been sold. So that is something I will stop it here. So I just want to leave a thought process.
Thank you, Sandeep, for throwing light and giving such a detailed clarity, differentiating between narrative and data, how the thought process should be when it comes to investment.
Yeah. Okay. Sure. Take care.
Thank you, partners, and everyone for being here with us today. Thank you, everyone.
Yeah. Thank you. Bye-bye.